right, now to our next conversation. Fintech is no longer just about payments and transfers. Today, technology is opening the doors to investing, allowing everyday Nigerians to buy assets, grow savings and build wealth straight from their phones. But beyond the hype, how sustainable and secure are these digital investment platforms, and what strategies actually work for retail investors, that just have maybe 5K or 10K to invest? Joining us to unpack this now, we have Babatunde Obadero as the CEO of Zitra Investment with over 2 decades of experience in asset management, risk, and strategy. Good to have you on the show. Good morning.
Good to be here. Love you.
Yeah, so technology, we keep talking about technology, fintech, and all of that. And we've seen a change, this time with the way people invest. Before now, you'd have to, call a stockbroker and say, okay, help me make this, I want to buy this stock, buy that,
Yeah.
But now you can just do it on your phone.
Absolutely.
Absolutely. You could just go on there, different apps, these days. And I'm wondering, was this expected, for you, in Nigeria? Seeing how long you've been here, is traditional finance, are we finally seeing that handshake, with digital finance?
Nigeria is an interesting market, financial-wise. In reality, before fintech showed up on the radar, we had started to make the adjustments in terms of moving to mobile. Of course, for starters, it was just your regular transfers and bills payments. But I think we're quite comfortable with mobile. Of course, back in the day, it would be relationship-based. It would be paper-heavy in terms of banking and financial transactions. But we've seen people move to mobile-led, maybe even arguably mobile-only for their financial transactions. And I don't think it is surprising. I think it's in line with the times, with the trend. In fact, that for most of us, we're comfortable doing nearly everything on our mobile devices. And so naturally, it makes sense that if I can do transfers on my phone and I can save on my phone, then I can also take my investment actions or activities on my mobile device as well. So I'll say it's just maybe natural.
Because when I remember the story, in the US, they had this Robinhood app.
Yeah.
And we see how the youth, use that app to actually sway the markets.
Yeah.
We've now had, meme stock trading, over there in the US.
Yeah.
Are we getting the youths in Nigeria with, with some of this technology? Are they
more than you say, more than most people realize we are. So let me say 2 things quickly. So you have in Nigeria today, you've seen how mobile penetration has mirrored financial inclusion, or financial inclusion has mirrored mobile penetration. So 55, 56% in terms of adoption of financial inclusion in just 5-6 years ago. You're seeing 64-65% right now. And so it's only natural that the young people what does our population look like? Probably more than 50% of Nigerians are 18 years or older.
Yeah,
so,
it's a youthful population.
So it's a very young country in terms of the demography. So very naturally, and you're not talking about, so for the young people, it's mobile first. In fact, it's mobile alone. I cannot remember or think of them trying to walk into the branch of a bank to do anything, or an investment company. So it's only natural. And more than people think, they are adopting it. So people think about those changes, and the first thing you're thinking about is investment. For a lot of them, it's first savings. So we need to think first digital savings. And digital savings is like, you used an expression earlier, the door. I'll say digital savings is the doorway to investments. So
I saw some data recently. It says most Nigerians are not saving.
I think that data might be looking at traditional channels.
Right.
I think it might be looking at traditional channels. I think there are certain things that are changing in terms of where they save. And so how much of that is captured in the data you're describing. I think there is a lot more to it that we are not necessarily capturing.
Okay, because maybe the traditional banks are not giving that much when you save there.
So people are looking elsewhere.
Are giving better.
Yeah, in terms of yields and all
yields.
That. Now, but of course, it's important that people pay attention to things like regulation. Is this entity regulated? It's important that people pay attention to things like what license does this entity carry. It's important that people ensure that their monies are safe and secure and talk to their financial advisor.
Not that they promise you 50%.
Absolutely.
And they end up taking what you saved.
Yeah. You might lose all of what you have.
Yeah, we see the SEC always warning us about such platforms.
And then, of course, it's important that they talk to an advisor who can probably give them better context.
All right, so let's look at the macro snapshot of Nigeria right now. Monetary policy rate, 27%. We did get that one cut in 2025 that took us there to 27%. Inflation rate, 15.15%. Exchange rate, 1,366. The Naira has been on a run this period. So looking at this and looking at the investing public in Nigeria right now, I did mention some people, they want to invest maybe 5,000 Naira, 10,000 Naira at this point. We know the HNIs, they do big money and they're able to make big money, back. But looking at 10K, 5K, is that really a game changer for someone trying to invest at this point?
My answer to that is a simple yes. I think that people must not lose sight of the compounding effect of money. So let me explain. Of savings, of investments in general. So let me use your example, 5,000 Naira. I'm a 23-year-old youth corper, Adamu, who just left uni a year ago and is serving and probably has just gotten a job. Say that I can save 5,000 Naira a week. Assume that I have plugged into the gig economy and I'm earning something else on the side, so I can save 5,000 Naira a week. 5,000 Naira a week is what? 20,000 Naira a month, 240,000 Naira a year. Assume that I put these funds that I have made in the year into a mutual fund at the end of the year. And let's see a scenario where maybe some way or the other my earning grows 10-15% per annum. So say I add another 15% at the end of every year to what I am saving, which of course now goes into this mutual fund that I'm contributing to. In 25 years, Adamu's worth in terms of this fund is close to $500 million.
$500 million?
Yes.
This is Adamu we're talking about here.
And Adamu,
but that's 25 years.
And Adamu, of course.
All right.
Now, this is where my quick response to younger people, I'm a young person too, younger people who talk to me sometimes about, who seem to be quite in a hurry to, I tell them things take time.
Right.
They just do.
Because the social media, they want to drive that car now.
Yep, but things take time. So he started out saving, then it became the pathway to him learning about investment. And I think that three key things, and I believe that they are happening already. I'm seeing behavioral changes. I know some apps that literally savings and investments was how they became large global tech businesses, right? So, which is why I said earlier to you, I disagree with the perception that young people don't save. They do. And it's clear to me that they're changing behaviorally. It's clear to me that they're beginning to form the right habits. And if you do that consistently, it's inevitable that you're on your way to creating wealth. Now, wealth isn't about the destination alone. I think people should be comfortable with their journey there. And if you do that and you're not unnecessarily under undue pressure to make it quickly, and you understand that, look, it's this little so-called little drops, like Adamu, 5,000 Naira,
you end up building
20,000 Naira.
But in that journey, for Adamu, the different type of assets at this point. Does he stick to just the safe havens at this point, even though we're seeing the likes of gold, silver not acting, like safe havens right now? Or can he also play in risk? Can he get into risk in that journey?
My Adamu here didn't do anything crazy or anything ridiculously fancy. Adamo probably had his mutual funds yields for probably 20% or 19%, and he still gets there. So for a lot of people, I always advise that you start simple, you start easy. Your investment journey is a learning journey for you as well. You're learning how money works, you're learning, and so you don't start very aggressive, you start easy, you start with lower risk asset classes, and these opportunities are available. Like I said, talk to your broker, but also even on the apps that you're describing, that's exactly how they present, so you can take the easier, in quote, less riskier options that allow you over time to build your wealth. But hey, it's 5,000 naira, 20,000 naira, 240,000 naira, and then in 2.5 decades.
Right. Just build it. Just keep building at this point. And maybe sometimes take some advice from AI on building that wealth. At this point, thank you so much. It was great having this conversation with you, Mr. Babatunde Obadero, as the Chief Executive Officer, Zitra Investment. Thank you for coming on today.
Thank you so much. It was a pleasure being here.
Fantastic. Yeah. All right, we'll take a moment now. When we come back, we're going global.